Good afternoon, Matthew. My name is Stephen Roman. I'm the Chairman, President, CEO of Global Atomic Corporation, and it's nice to be with you here on Crux.
Hello, Stephen. How are you? Been a while? Been okay?
Been a little while, yeah.
Very good.
Good to be back and give you an update on what we're up to.
Yeah, things seem to be moving along. We're going to talk about your Q2 results in a second. I wouldn't mind your commentary on the market, though. Uranium equities seem to be moving sideways, if not sliding down a little bit. Any thoughts?
Yeah, no, I think, of course, in the spring, the uranium equities had a good run because uranium was moving up from about $26 at the time to 32, and everybody was talking about net carbon zero initiatives. So, it was time to get into the uranium space. Over the summer, typically utilities back off on buying. Things get a little bit quiet during the summer. And of course, now we're in August, which is usually the lowest period because everybody's on holidays. In the meantime, the companies, I would say, are working on all fronts. Not just ourselves, but other uranium companies. And I would say that generally speaking, everybody's down about the same amount, between 25 and 35%. But I view this a good buying opportunity when things are quiet. And, I expect in the fall, the utilities are going to get back into the market. We've had recently announced the Sprott basically going to market now and raising $300 million to buy uranium. So that's been recently announced. So I would think that by September, things are going to start turning around on the uranium side. So as I say, good time to buy some cheap equities.
What's your take on the Sprott Physical Uranium Trust? Because there are the people out there saying, well, they're just going to focus on driving that spot price up because that's going to drive the equities market, and they've got a lot of investment in uranium equities at the moment. Or has it got a bigger job to do? Because 300 million at the market is good, it's significant investment, but they'll need to raise a lot more if they're going to try and drive this market and the sentiment in it, won't they?
Well, I would think if they're in there for the long term, yes. I think this is sort of getting their foot in the door. $300 million will buy you, 10 million pounds or so these days? I mean, that's something we can produce at Dasa in 2 years. So it's not going to make a huge impact, but I would think, the general concept to hold physical uranium, waiting for prices to get back to $50 or $60, which I think most people think they're gonna be there. It's a good opportunity. So they'll probably start with that, and then as things move along, I'm sure they'll be back in raising more money to buy more pounds. So it's a good positive force for the market.
Okay, so you welcome their arrival and their marketing punch
Absolutely.
And ability that they've got. Just on that, have they approached you to try to get your view on the market, or are they just quietly getting on with the business of doing their business?
Well, Sprott know about us. I think some of their people own shares of Global Atomic, and they like the company. They haven't approached us to buy physical uranium from Global. But, you never know. That might happen down the road. But they are shareholders in our company.
Okay. Let's talk about the Q2 numbers. You just, recently put out an announcement about them. So you want to give us the headline numbers? Because I wouldn't mind actually talking about what's going on the ground, actually.
Well, on the ground in Niger right now, we're just waiting for the government to give us the final word on their participation level. I think that's going to be, big news. And the next thing, of course, is we're starting our big drill program in 2 weeks at Dasa. So that's going to be doing both exploration along the flank zone strike length, which could increase that phase 1 resource from 12 years outwards. But more importantly, because the flank zone is only 20% of the deposit, we want to move the balance of the deposit up into a higher category, measured and indicated, so that we can wrap a feasibility around that and actually show the market a new mineral resource estimate as well as new economics for the entire Dasa project. So as you might recall, the flank zone was just sort of a starter starter mine. And, obviously it's a very economic one, even at today's prices. But, the market needs to understand that Dasa is a lot bigger than the flank zone.
No, yeah, I think most people get that. I think what people are keen to understand is your relationship with Orano and being able to process at Somair, and have any conversations happened, and if so, what are those conversations about?
Well, more than conversations have happened. So I guess since we spoke last, we've had samples sent from Dasa to Somair. They've done a lot more metallurgical test work, including blending our material with their material to see how it processes in their plant. Everything has come back very positively. I think we announced some of that in our second quarter report. So, we're proceeding now to define an arrangement to ship ore to Somair from Dasa. So, the plan was that this was a value opportunity. It's not being studied in our feasibility study. Our feasibility is relating to a standalone plant and standalone mine. But as we always said, our MOU with Orano was a value opportunity whereby we could start shipping development ore to Somair and generating cash for the company, de-risking the mine, and obviously helping the bankers make a decision on financing the plant.
Right.
So this is all in progress. We expect to be, and as we told the market previously, we expect to be moving dirt in Q1 next year. So the idea is to complete the box cut, to get the area ready to start to ramping underground. So by about end of 2022, early 2023, we should have material available to ship to Orano.
Okay, so I just want to remind people. So the flank zone is the higher grade component. It's comes up at surface. You want to that's 20% of the ore body. How do you come at it? Because the money, getting money flowing is good. Getting ore into the plant is good. But you're going to have to come up with a deal which is, economically viable. So you could do tolling. You're talking about blending, so that's going to be a little bit more than just a pure tolling agreement. There's a number of ways you can come at it. How do you maximize the returns that you're going to make for your shareholders off of this, initial flank zone project?
There's two options. One, as you say, is a toll arrangement, where you send them so many tons of ore every year. They toll mill it for a cost. Then you get the uranium and you can sell the uranium. The other option is we just sell them the rock. So we figure out what the grade is of the material we're selling, and they tack on their process fee and they give us the net in cash. So we're working on the economics right now to see which one would be better. They're obviously doing that as well. The key thing is that we have a good window here to supply material while the mine is being developed. And of course, we're getting our economics right now on how much it costs to actually physically truck the material up to their plant. They're about 100 kilometers away. But, it's good, very good grade material. And I think based on all the cost numbers we're getting right now, we can make a very good profit shipping up to 500,000 tons to Orano. And that was the amount we signed on our MOU, is to ship a minimum of 100,000 tons a year for 5 years.
Okay.
So the numbers basically are the same.
Right. The numbers in terms of the quantum of ore, but what about when do you get to the economics? When do you start to understand what it means for you? Because you'll have made a decision on that MOU to look at, getting cash flowing. You've also got cash flowing from Turkey, right? So there's a number of options that you have available to you in terms of conversations with bankers. Or you could keep that ore, get your plant financed, and capture more of the upside. So that decision-making process, are all those options still on the table? Or is it just a case of let's get some cash flowing from Dasa as well as Turkey, and that's going to hopefully make the money a little bit cheaper up front?
You know what? It all boils down to what's the interest level from the financial partners, so to speak, the banks and people that will be providing a debt component for the project. So if they're happy to do it up front and just say, listen, we just want you to keep all your ore and put it through your own plant, that's fine. But I think, based on the schedule we have, and we would like to start working on site, doing the mining in Q1, bankers typically take longer than that to put a package together. We don't foresee a package being done with the bank for the entire financing until, end of Q2 or sometime in Q3 next year. So, we would like to start moving on the project sooner than that, obviously. And the Orano option of shipping material allows us to start the mining with very little capital and start generating capital to pay for a lot of the capital we need for the plant construction.
Okay.
So it gives us a very good optionality.
So what's happening in Turkey, actually? I mentioned it, so I might as well cover it now. Obviously, zinc prices are good. They're running the plant well and efficiently. It looks like to me. Any hiccups, any kind of red flags that we need to be aware of?
No hiccups or red flags. I mean, the electric arc steel mills aren't running at capacity yet. So, we've put out some guidance in some of our statements that we're running at about 70%, which is where we are. We are expecting still to pay off the loan, the Befesa loan, this year. So next year, the cash will start accumulating to our account, and that's on schedule. So things are going well there. Obviously, the zinc price is definitely helping. So if you get a little bit less dust, you get a little better price. So that's what's happening there. And, there's a new big mill that's being started, a big steel plant that's being started close to us in the Iskenderian area. So it's scheduled to start up in September, October this year. That has the potential to keep us quite full. So if we get to the point where we're running at 80 or 90% capacity, you're going to see much, much greater profitability coming out of that operation.
Interesting. Just a side note, we've seen in the battery metal space, the energy space there, Chinese companies moving quickly to buy up and option various projects around the world. The West is moving a little bit more slowly on that front. Given the supply-demand story in uranium therefore nuclear, do you expect to see a little bit more of that type of activity in your space, in the uranium space? Because at the moment, people are just sitting waiting for a spot price to move, and maybe Sprott has an ability to help move that along somewhat. But there's going to be a moment. I mean, you sat through the last cycle. You've sort of seen it happen before. What's your expectation?
I've seen a few.
You've seen a few. I wasn't going to say that. How does the market get played? Is it the West just being too slow to react, and the Chinese institutional companies will walk in and pick up deals? They like Africa. I mean, have you had any conversations?
Oh, absolutely. China National Nuclear Corporation and China Guangdong are both in Niger. China National Nuclear Corporation built the Azalik mine. They ran out of ore in a year because they didn't do any exploration. Now they've announced that they're going to be spending some money on exploration. The government's been putting pressure on them to actually get that operation going again. China Guangdong, of course, they operate the big mine, Husab. And you know what? I think that they're all interested. They're all looking for assets like this. Obviously, the French are there with Orano. The Russians are in the area as well. So, I think that generally speaking, uranium is a very strategic resource. Morgan Stanley just came out with a report yesterday, I believe, that said that they view uranium as the #1 metal here in the next decade. So the reason being is everybody is building reactors around the world, and they need fuel. So I just think that the more we de-risk the project, the more we move it forward, the more interest some of these big guys are going to have. Now, our plan is not to sell this. It's to put it into production and start making vast quantities of money in a rising market. But, we're always open to listen to proposals. Let's put it that way. We're here to make money for our shareholders, and we want to make sure that our shareholders are well rewarded.
Okay, as a sign, I think Barclays also just put out a note about nuclear as a clean green energy and affecting uranium equities too. I thought that was interesting. I think that was also this last week. But on I want to sort of ask you about the way you get competitive tension going. You don't necessarily want to have to go and fund a mine build, but you want it to be interesting enough for one of these, whether it be Chinese, Russian, French, whoever groups, to kind of look at. I know you say you've got to say we're here to build it. You've got to say that, but the reality is it's going to be much easier to get competitive tension going, drive the price up, and have someone step in and deal with that kind of capex component, isn't it?
Well, it depends on the price, Matt. I see assets like Canadian Malartic here in Canada. It's a big low-grade gold deposit that went for $3.5 billion. We have the largest, highest grade uranium deposit in Africa. What is that worth? Is it worth $3 billion, $5 billion? It's definitely not something where you chase the price up to $5 a share and blow it out. I mean, that's of no interest to me. And I think our shareholders expect much higher than that. So, it depends what kind of a frenzy gets going out there. If uranium starts moving up to $60 a pound or plus, is somebody willing to step in and pay the right price for this asset? There's nothing like it out there.
Well, I mean, you're 400 million or so today. If it gets up to $60, that's going to be, it gets a little bit expensive up there. Or is that not the way the big boys work?
Well, the big boys, they want to buy something that's been de-risked. So as we move forward, we continue to do that. They want to, buy it basically turnkey. So they walk in and take it over. And these things happen. And typically, price is not a big issue. So if they want an asset and you can see that there's 250 or 300 million pounds here, and you've got a 50-year mine life, what is that worth to a big group like a China Guangdong or Orano or whoever that wants to have a long life asset that's at an exceptionally good grade and they can make money on even in low markets?
Well, here's one for you. There's a question sent in about, do you go and do a NASDAQ or full listing NYSE US component? If China is the ultimate buyer, probably, because they got the cash. Does going and listing on the US exchange make it less likely that the Chinese will walk in? Are there more restrictions on M&A? Or is that part of one of the levers that you've got available to you to kind of drive the value? I mean, how do you play these things? I'm intrigued.
Well, right now we're on the OTCQX, so we do have a U.S. exposure in I think 46 states. Clearly, moving to the NYSE or the NASDAQ would be great, but you have to have, I would say, the company in production and generating revenue to support the cost of being on those exchanges. It costs a lot of money because you move into Sarbanes-Oxley and all these other regulatory requirements. and you need a whole accounting staff just to manage the regulations. So it's not something we want to burden the company with at the moment. We're very well served by the Toronto Stock Exchange and the OTCQX. We were in the top 25 companies on the OTCQX last year. And you know what? I think for the moment, that's the place to be.
Okay.
It's just a matter of, where do you put your dollars? I'd rather put the dollars in the ground and advance the project than, spending hundreds of thousands of dollars listing on a big exchange in the U.S.
Okay. So the rest of this year, you've kind of laid out, there's a few targets that you laid yourself in terms of operationally on the ground. So what should we expect to see from you for the rest of this year?
Well, I mean, we're going to have results coming out of our drilling. We're going to have the government clarity on their participation. We're going to have the feasibility study coming out, end of September, early October. You might have offtake agreements now done sometime later this year, early next year, with a number of utilities. So, we're just going to be knocking down the milestones as we move this thing to production.
You seeing any M&A activity happening with you or others in the space?
I think so. I think there would be some. As far as we're concerned, we're not going to be thinking about M&A right now. We've got a job to do, and we need to get it done. So, we built a new plant in Turkey in 2019. That's now paid out this year. So that's going to start generating more profitability to global that we can deploy in developing Dasa. And once Dasa's up and running, of course, you're going to have a very significant cash generator there. So, I think it's a company building asset. There's not too many assets out there that are like this. And I think, it's how long do you want to stay in the story? I mean, if you can build a company like Hemlo Gold Mines in Canada that moved, my friend Ned Goodman up into stellar status, and Corona and those companies that moved up to $40 a share, I don't see this any different. I think this is a company that's got that potential.